Hey, good morning, guys. So I'm looking at Origin Token. Now I know some of you may confuse the two with Origin Trail, which is track, and Origin Token. They are two completely different projects. Um, so we're on Coinbase. You can go down to the official website and you can check it out. It's projects. I love the website, by the way. It's very clean. Looks very good. All right. Let's go to about. And I'm just gonna play this video just for a little bit. Welcome to Balancing the Ledger, where finance and tech intersect. I'm Robert Hackett.
I'm Jen Viechner.
And today we're here with Matthew Liu and Josh Frazier, the co-founders of Origin Protocol. Thank you so much for being on the show.
Thank you for having us.
Origin, tell us exactly what it is. You're helping build decentralized marketplaces. Take it away. What does that mean?
Yeah, so we're trying to build a platform that will enable many different decentralized marketplaces, hopefully all over the world. And so when we're talking about marketplaces, we're talking about these two-sided internet websites or mobile applications that pair buyers and sellers today. So these digital meeting grounds. In the future, we would like to enable the decentralized versions of Uber, of Airbnb, of Craigslist, of any other type of marketplace where these peer-to-peer transactions should be happening. But right now, they're actually peer to a corporate monopoly such as Uber to that peer.
Good
Josh,
point.
I use Airbnb. I use Uber. They're pretty good products.
Listen.
They work quite well. Why would I want to move to something else? Like, what's the advantage that comes with a decentralized marketplace?
Sure. So there's three big improvements that we think can be made to these types of marketplaces. First is pretty obvious. When you cut out the middleman, the fees go with it. And so we see these marketplaces like the Ubers and Airbnbs of the world charging 20, 30, sometimes 40% out of every transaction. And so we can give the buyer and the seller a better deal by getting rid of that middleman. Secondly, we see these companies as single points of failure. We've seen Uber and Airbnb get banned in cities all over the world. And when you have a truly peer-to-peer system, it's impossible for overzealous regulators to come in and shut it down in one fell swoop like that. And lastly, we've got 2 billion people on this planet who are not welcome on those platforms because they don't have credit cards, they don't have bank accounts. And so cryptocurrency enables us to open this up to anyone who has an inexpensive Android phone. And for billions of people on this planet, the very first digital marketplace of any kind we're ever going to use is going to be built on a peer-to-peer system, something like Origin.
And there's an aspect of
All right. So
this where they actually can derive
Sorry.
value from the tokens.
So, guys, so when we're looking at these projects, if you notice, they identified the problem and they're providing a solution. So that's what we want. Let's not get too caught up in price. Let's don't get too caught up in what the potential percentage gains we can make. Over, I say, 100% of the projects that we have invested in, we didn't know 100% for sure. Like a lot of them was going to run 1,000%, 500% or more, right? We had a feeling that they would do well because of where we are. We're early adopters. You're early investors. So we have what we call the first movers advantage. That we're taking advantage of being the first to the party. But also being the first doesn't always mean that you're right. There's plenty of assets that have dropped on Coinbase and had a temporary run up and then had a massive collapse of 80 and 90% more. And you would say, well, why does that happen? That happens is because the early adopters know that when their project is put on a big platform like Coinbase, they have more exposure. They get access to what we call more liquidity. Liquidity means there's a lot of people that are participating in the buying and selling, the volume of that particular asset. So if I've bought something at 5 cents and I've been loading on it and it's not on any major exchanges or brokers, well, if Coinbase decides to pick that up, instantly I can have access to a huge pool of potential buyers. So if I have a lot of buyers, what do I need to be doing? I need to be selling. When there's a lot of sellers, we want to be buyers because we're getting it in at discounted wholesale prices. Okay. So when you think of that, if my project gets on Coinbase and I got a lot of buyers, I'm going to be liquidating, making money because I know eventually the price is going to drop back to a level that where I can go back in with less capital and get more, or I can put everything back in and just maybe 3 to 4x what I previously had, right? So I want you to think about that in the process of when you're buying an asset or whatnot, but don't get too caught up in the price. That's what I'm going to. Get caught up in the tech. Invest in the tech, adding it's solving problems, adding value to the real world. That's what you want. Already, this website looks beautiful. They had great um, video editing, all that stuff. It looks great on the eyes. I like what they're talking about. Yes, we could go deeper, and I'm not going to do that on here. Uh, but we could go into the white paper, and it gives you everything you need to know about what this project is about. So when we're doing research, it takes time, guys. For some of us, that's a little bit more um, have a little bit more experience. A lot of us don't really go deep into the white paper. We may skim over it. We may look at what we call some of the technicals. So we may look at the chart. We see where that's at. We see what type of supply is dealing with and where is price currently at, and then just get a feel for, all right, is this undervalued, basically? And how will we determine if it's undervalued? Like a lot of times we do look at other projects that are in the same space that has either already taken off or somewhat solidified a foundation. Okay. Um, let's take Ethereum. Ethereum has solidified a foundation, but you have other projects that's coming to the market, such as Solana, that is still finding its way. So Solana went from $1 and some change all the way up to um, let's see what it came out to be. Uh, so let's see what the high was on Solana. So 258. So on November 6th, it went to 258. So look back here at this flat line back here, guys. We're talking about Solana in 2020, April, May, 60 cent, 54 cent, 65 cent, 58 cent in May. Look at this. Imagine you being in here. So this is a good thing. And it's somewhat of a pivot for what I was planning to do with this video. Let's take a active role in purchasing Solana. Okay. And we're going to do the times two method. All right. So let's say we came in at 83 cent. This is where we saw it. So this is where the methods come in at. And it helps with your buying. Yeah. And I'm just going to use a calculator on my phone. So 83 cent times two gives us $1.66. So what are we going to do? We're going to actively buy. So you say, well, how much should I buy? That's up to you. Remember, everything is about the math. So that's the beauty of math. You can play around with the math to where you can use future hypothetical situations, meaning that, okay, let's say my asset goes to $50. How much would I have? Are you satisfied with that? If not, maybe you need to add more. I always like to add enough to where I always base everything off the minimum, not off the maximum. If you ever been part of multi-level marketing or anything, somebody comes to you and they're trying to recruit you to become part of what they're doing, what you notice is that they use the exaggerated numbers, this or the hypothetical numbers, but it's not really realistic. You're showing us numbers on the people who are the exception to the rule, who are doing very well in the organization, not so much at the bottom. So what I like to do is I like to play around with numbers that are at the bottom. And if I could be satisfied with those numbers being the worst case scenario, then I like to pull the trigger. So for instance, I would have never expected Solana to be up here at the 212 right now or 258. That would have been the furthest from my mind. However, I would have did something around the $2 to $3 range. So therefore, I would have to build differently. So when that $2 to $3 come, I can look and say, I'm satisfied with that account growth, but I'm also going what? I may leave it alone and say, that's it. I expected more, but I also lowered my expectation to, if you get what I'm saying. Like, yes, I expect more, but I still lower my expectation and I try to meet the lower expectation goal first. And if I meet it, I be like, you get what I'm saying? I'm satisfied. What happens is people set an expectation um, so so high, but then they don't properly apply the math and build it correctly, and they really never get to realize, the full potential of it because they shortchanged themselves. They didn't really put effort into building their positions. All right, so they just lollygagging around, and then when it started to take off, and now it's up at $50, they're like, "Oh, now I need to put in more." I'm like, yeah, you would have did well on this, put in 50, but you get what I'm saying. You could have got a lot more bang for your buck. So off my rant, we can buy this all the way until $1.66. All right. So that's the times two method. So April is at 83 cents. So what we're gonna do is, let's say we're gonna be modest and we're gonna do $350 at 83 cents. All right. That's April. All right. May, 73 cents. So you may say, I'm gonna do another. This time I'm gonna do $500 divided by 78. All right, and then you got 500 divided by 78. They give us 641. So you done spent $850 so far. All right. All right, May is 55 again. This time you may want to do 250 divided by 55 cents. That gives you 454 coins. Okay, so far we got 5, 8, $1,100 invested. Now, let's keep going. All right. So June price still down. You may say, "Hey, I'm gonna add $150." All right. You just showing. Now I would be a little bit more aggressive instead of going this month because this is to now you're going into the months. You came in April. It's in June. To me, personally, I probably would do like a $25 a day, $20 a day, just constant buying of it. And I would have to pause the video or do a whole nother video of me actually doing one like that. So what I may do is just later just post in the group. I just do it like a little chart, whatever, just showing how much if you would have bought 25 a day and see what that would have came out to be. All right, or $20 a day or 15. I'm just going to show you that. Okay, so you can do that with your recurring buys. So $150, you add another 150 to the pot, and that got you 202 coins at 74 cents. All right, and let me see. Let's keep going. All right, remember. So look at this, guys. All right, got to $1.80, $1.74. Remember, $1.66. You do not buy. Okay, you got to stop buying. It's in August. You cannot buy no more. All right, now watch this. Okay, here we go. We got it. We're good. We're good. We're good. You're staying in it. You're staying in it. Okay, it's $1.60. What you can do? You can start buying because why? It's below $1.66. You can. Okay, we're buying. We can. No, we're not no more. Stop. Stop. Mm-hmm. Mm-hmm. You can buy December. You can. You can buy. Okay, this is still 2020. And now you see where we are now in 2021. So we got in January right here. It was around $1.34. So when you see it's $1.84 right here, that means it's the closing candle, the closing price on January 1st. So the closing price is that, but price fluctuates throughout the day. So when we identified, we saw it was at $1.34. But it eventually closed a little higher. So that's why you see $2.193 is different. So like today, this is 212. You seeing it this time at 212, but then you may tell somebody, yeah, on Sunday it was $212, and you're like, nah, man, it was 216 because that's what the chart say. I'm like, it closed at 216, meaning the 24-hour candle for this period. Whatever the price it closes at, that gets cemented in the historical charts forever. So when we go back time and we're looking at these prices, it's based off the closing price. It's not based off of what price it went to. You have um, charts that say all. I mean, you have assets that say all-time lows and all-time highs. You can only get an all-time high if the price has to close at that. It can't just go there and visit and then come back down. No, that won't get you the all-time high cemented. All right, because it's like a flash crash to get there. So that's why sometimes you see on certain platforms, it'll say one thing and then on another say another about its all-time high. You're like, well, which one is it? It's like, well, see, we don't know who's measuring what. Somebody can measure a flash crash. We seen we look. So check this out. We seen that some people can manipulate to the point where Bitcoin has flash crashed down to like $1, $2, and $3. Some $50, some $100, like something that come boom, boom, just like that, and come down and fill somebody's order at that level. That is some super crazy manipulation. But if we have seen those happen, you're never gonna see that somebody says, "Oh, the yearly low of Bitcoin was $50." You're not gonna see that. Only way that's gonna happen if it closes at that particular price. Tell you the truth though, I think everybody on this call deserves some form of a glitch that's going to be positive for them. Imagine you wake up to your phones, you got a glitch, and it say you got a couple million in there, and then you actually hit the sell button, and if you really get a million, that'll be crazy. It's crazy that sound like that has happened in the past to certain people. It's crazy. Anyway, so origin. Token, not trail. Now I love origin trail. I do a video in a few minutes, so I'm gonna break these up in individual videos. I like it. All right, now let's get on the charts right quick on origin protocol. Okay, remember, fall in love with the project. Well, as Jimmy, one of our co-founders, said, he wants you to fall in love with your portfolio and not your crypto projects. OGE, OGN, US. Okay, so when you're on TradingView, you're gonna see over here to your right, you're gonna have a lot of exchanges pop up. I would suggest you choose between Binance or QCoin, not Coinbase. Here's why: Coinbase has a lot of new assets. QCoin and Binance, they're the OGs. They're gonna have assets that already been in the market that already have what we call historical data for the charts. If you choose Coinbase, if a project only been on Coinbase for like a whole week, you only really gonna get a week's worth of data on the chart. But with Binance, they may have had that coin for 2 years, so they're gonna have 2 years worth of data. So that's another thing. So you know I'm not gonna choose Coinbase, but I just choose. And does it matter between the USDT and USD? Not really. Okay. So we'll go with Binance. All right. So I'm on the Origin protocol. Okay. And this is what I love. I love this chart already. Here's the reason why. We got this big impulsive move. Okay. So this is a huge impulse. What that suggests is that we have a lot of uproom target. So now we're gonna go ahead and turn this session into an actual charting session, which would be good for you guys. Okay, here we go. All right, so our next targets based off of this pattern, we want to see a $4.20 origin and a $5.41. So 428, 541. 428 is the first target, 541 is the second, and our third target will be sitting up here at $8.69. Okay, so these are our targets that we're looking for. Okay. Now, let's play around a little bit. Let's do this. Let's take all this away. So now I want you to see, let's use some of our uh, techniques. Okay. Now, already with this formation, okay, um, I want to be leery if I was coming in the market. So I'm trying to act like I'm coming in the market. So I got to use some of my trading skills. Remember the rule, okay? Automatically, this should be a rule for every member. Whatever price you found it at, you got to multiply it times two. That's the times two method, okay? So already, if I came into this market, I said $1.05. So I got to $2.10 to buy. Once it crossed $2.10, I stopped buying. Now you may say, well, Eric, what if I want to buy more? You can do whatever you want. You want to do a times three method? Do it. Times two method is a foundation. You can modify it and adjust it according to what you need to. I only do the times two to give me a sense of urgency to stop sitting around, playing around, and acting like something is supposed to be there forever. Sometimes we get spoiled because of this right here. We'll sit here and say, oh, look at that. Yeah, I got time. And you may not know where you are in the cycle. And you sit in here, you see all this time. So then you get over here, and then you may think that you got the same amount of time. And you may not. But what this does is gets you just get involved and you're being aggressive. And that's why it's important to have 5 max projects. Preferably probably 3, really, to be the max starting out. But if you got to stretch it to 5, that's okay. Now, with that being said, look at this accumulation zone. Imagine somebody who spent a vast majority of time in this zone playing around. Okay, in that zone, we've already see that price was really, really good. We have 21 cent, 18, 19 cent, 11 cent. Look at all these opportunities. But when people, let me move. Look at this. Look at this move. Bam, bam, boom. Okay? Look at it. And look at this downward trend. The average person thinks something is wrong. Dark horse investors do not think this means something is right. You're like, well, how is that right when it's dropping in price? Because the fundamentals have not changed. If the fundamentals have not changed, this is right. I love it. Give me more. I want it. Sell to me. Give me more, more, more. I want to be greedy. I'm greedy. I'm greedy. Like Warren Buffett said, when everybody is what? Fearful, we're greedy. When everybody is greedy, we're fearful. Yes, give me this. But instead, people want to say, give me this. You buying that premium. You could have been buying down here. But remember, when you come into the market, you come in the market in what? Certain situations that where you can't avoid it. If you come in the market right now, you see the $1.05 is your only save. That's it. You can't do nothing else about it unless it goes lower. That's it. So give yourself a room and say, all right, I got the $2.10. Why we do the times two method? We do the times two method is because if you don't believe that at minimum, that your asset can do 100% return, why are you in it? That's the model of it. Why are you in it? I wouldn't get into something if I don't think that it can at least double. So guess what? I want to what? Load as much as possible before it doubles. So because doubling your money is like the golden mark in the investment world. I doubled my money. Artists, not artists, but most people use the $1 million, mark. If you make a million, like that's everybody's goal is to make a million. Why y'all don't want to make 600,000? Why you don't want to make $347,933.27? See, that don't sound right, do it? But for a dog horse investor, that sounds very well. You know why? So it's nobody's thinking about that. If we want to do things nobody's thinking about. What if you made $465,238.14 this year, and then next year you make $275,219.83. Basically, in 2 years, you done grossed over $500,000, while somebody else is sitting up here trying to just make a meal. When your focus is, no, I'm just working my plan, I'm working my system. I don't have a goal of a meal because why are we always talking about a meal? Like, what is a meal? What does that mean to us? What is making $1 million? It shouldn't be about making a million. It should be about perfecting a process. You work your plan, you work your process. And this is what I do. And then who's complaining? Nobody watching this video will complain if they made 300 grand off of a system and walk away and say, man, I ain't make my million, man. I'm mad. Huh? So think about that. We give ourselves these crazy, outrageous targets that we have to follow for society. Everybody on this call could literally retire right now if you had $600,000 just came flowed in. You probably could pay off all your debt. You can do it. The reason why I say retire is because eventually, what you're going to learn in Dark Horse, because there's other elements to what we do. We will eventually teach you how to trade too. We'll teach you how to do other businesses. There's a whole lot of stuff that's coming. Okay. So when I say retire, you will feel comfortable knowing that you can walk away from something after paying off all your debts and everything because you have a skill, a system. I could wake up any morning, look at my phone, chart up something, and I could participate in any market, forex, options, futures. It don't matter. Do I do that every morning? No. Sometimes I trade forex once a month. Anybody who know me, you know I had one of the goals. I only want to trade forex 4 to 5 times a year. You're like, that's crazy. Yeah, but that's going to be some crazy focus, and that's going to be some big capital, meaning that each trade can net me $50,000 to $80,000, meaning that I'm doing massive swing trades and massive setups. I can do that because I like to specialize in that type of swing trading. I don't like day trading. So if I had to do that, it'd be fine. Have I met that goal yet? No, because I'm focusing on all this, but I can. And you know what? Now that I'm talking about it, I believe I'm gonna go ahead and start prepping for it. What that means, I prep. I start doing demos using large capital and seeing if I could perfect my system. Because if I'm only trading 4 to 6 times, that means I gotta have legitimate setups. That means it gotta be impeccable. Okay. I can be perfect. I had 52. No. It's 50, 53 winning trades in a row one time. And then 2 trades later, blew it all the 53. That was a risk management issue. I wasn't doing proper risk management. So that's why that went down. But now I know better. We do better. Sorry for the second rant. Let's measure this. Remember, we're doing a bar replay. We're back in time. All right, so the next targets, we're going to look at 171, 215. All right. And then on our top target, we are looking at a $3.42. What is this? Origin protocol. All right. And we're going to take these off. And we're going to sit here and we're going to put our target 1. Target 1. And we're going to do target 2. There you go, target 2. All right. All right, now let's play this. Let's see what's going on. I'm gonna go to a bigger screen for you guys. All right, so look, we're gonna. What's the rule? We're gonna times 2 the method. Anything that stays below here or below that 210, we're buying. All right, so let's get the plan. All right, so look, we got in and just blasted through. This is a good way to see this. So already it took. Right, remember it's $2.10. All right. So basically in 2 days, your stuff got hit. All right. But then it pulled back. You got a little bit more opportunity if you want to buy some more. Why? Because it's below 210. But this buying pressure just came in and just killed that, right? All right. So let's play it. Let's keep going. Now look, it did go up. It barely missed it. Sometimes that happens too, guys. So when you get a target, sometimes it barely turns around at it, and you see it right here. We was like 4 cents off from it actually hitting target 2. Well, that's fine. We got target 3. We got all this other stuff. All right, look, what happened? Price came back down. What are we doing? It's back below, so your buying comes back into play. Okay, it's back below your 210, so you're loading up some more. Oh, look at this. Woo! Well, see, this is a gift. This is a gift. Now watch this. You're lower than when you first got in because you got in at $1.05. Look where it went. It went all the way to 49 cents. So somebody think that they did wrong. It's like, I did wrong. I should have took profit. I should have. No, you may have a master plan that doesn't require you to even take profit on these first ones. Okay. Yeah, we went up. You was in the green. Now you're in the red. You're down on your position. What we can do? The worst thing you can do is sell it for a loss. But the other best thing you can do is you can add more capital to these levels to buy more at a cheaper rate. Or you can do a springboard strategy or rolling strategy. You can roll in from another asset that's been doing pretty good that didn't get beat up. You can take profits for that and then you can roll it over here to get a bigger position. That strategy is used so you do not have to bring in fresh new capital from your bank. You can use capital that's already been working on another position and you can add it in. And boom, now you got a good portfolio by adding more coins at this level. So let's play. All right, look at this. So it stayed 1, 2, 3, 4. This is about 5 days. It stayed within here. And it even went lower to 44 cents. So you're just loaded. So I got a sense of urgency now. I'm like, oh no. I gotta gobble up. All right, here we go. Still down. Look at this. Look. This is, whew, boy, they fearful right here. Look at all this. But we following rules. Your rule is my first time getting in was $1.05. And I multiplied times two to $2.10. I am gonna, if that thing is below 210, I am buying until I can't buy no more. And I'm gonna be telling my folks, like, you need to be looking, man. Look. This is the reason why we don't want a lot of people coming in dark horse coins right now, is because they're not going to understand these methods quick enough when the market is finally fully moving, and it's too much. So y'all got in at to me the perfect time, because you get to see a combination of red and green within a short period of time, and then now you can understand why we say what we say. Some people didn't really get this, guys. We evolving. We evolve. I mean, the website has evolved. The way we do content has evolved, and it's gonna get better. We're gonna be rolling out stuff that's way better than what we do. That's part of being growth. And a lot of people can see the growth. I see a lot of growth from my members. A lot of them are. A lot of people have surpassed me financially. All right, we had 6 people hit the $1 million status. And months ago, when we had that last rally back in May and April of 2021, we had over 17 people hit 6 figures. Now there's over 20 something now. So you see, it's growing, it's getting better. I'm not even the wealthiest person in the group. There's a lot of members out here that, like, they really killing it. Like, some people put $80,000 down on a project. Like I told you, there's a lot of people in this group that has a lot of skin in the game in various industries. Okay, buying. And look at this. What is this? This is about to form in crypto. They call it probably a inverted Bart Simpson. So it looks like his iconic hairline. Let me crunch it. Let you see. Look at the choppiness of his iconic hairline. And you probably laugh when I said it, but I'm gonna show you on here that it really is a true. Well, it's a term that they use in trading. So remember, this is an inverted Bart Simpson. So I know what an inverted Bart Simpson means. It means bullishness. This is going up. Okay. Now, are we still buying? Yeah. It's because if you got over here 105, but for you today, you got to do 115 times 2. You're buying until it crosses 230. Now, well, let's say it do cross 230. Can you still buy? Yes, guys. Yes. We don't want to be that, strict. You give yourself. It's just that it gives you, like I said, a sense of urgency. Like, just stop, like, sitting around like you just got all day. So this, because see, when you see this, you think you're gonna always get that. That doesn't always happen. But what happens is, if somebody became a sense of urgency as if they're never gonna get this chance again, and they're buying, okay. Why we can't do what so you call FOMO? It's called fear of missing out. People, for some reason, do not reverse engineer fear of missing out. They do it to get in to when prices are already moving and they think they missed the train. No, do the other opposite fear of missing. We're contrarians. We do the opposite. We do the fear of missing out as, I don't know if these prices going to stay at this level, so I'm going to try to get as much as I can. That is the proper fear of missing out. They say, oh, what? Oh, y'all about to shut this buffet down. When? What time? Oh, we don't know what time, but you better get as much food as you can. Oh, let me call my boy, man. Y'all better put some to go plates. We need what we need to get. Damn, we don't know. It could be 5 days, 6. It could be an hour. I don't know. But I'm getting as much as possible. Where if for whatever reason the next 5 minutes they decide that they're gonna shut the buffet down, I'm like, hey, I got as much as humanly as possible as I could. I'm satisfied. It is what it is. That's how you gotta look at it, instead of being the person who got the fear of missing out up here and then just got destroyed. Their whole morale is destroyed because they don't know the market's like. But a dark horse, we do. Look at this pullback. It pulled back 87%. And remember, even if you OGs on here, remember what we talked about, a bear market. Doesn't that look like a bear market? You see what happens? Get out of the terminology of the bear market and the bull market. To me, those really doesn't exist because they are biased. Nobody said that this was a bear market. If you notice, it dropped 87%. All the altcoins in the bear market dropped 80% more, between 80 to 90%. That was his average. Even Bitcoin, by 83-ish percent, it dropped. Nobody said that this is a bear market. I told you guys this cycle is going to be totally different. It's not going to be the long, grueling 2 years worth of just being down and all that stuff. In fact, the last bear market really wasn't even that long, guys. They exaggerated that. We had a couple of months of a downtrend, then we had a couple of months of a nice little rally of I'm gonna show you on Bitcoin. I'll show you in a few minutes, but let's finish this now. All right, so this is where we at. We got our targets to the upside. This is what we're waiting for. All right, we're down here, and these targets up here still exist. Okay, so you're at $1.16. We're talking about completing this. This one's not even done. So 340. Let's do this. So where you are today, if you buy, this is how much profit you can basically potentially make. That's 275. That's 372. All right. And then all the way to our top. And this is what we consider it would be in a super cycle. Okay. We're talking about a 656% gain on your money. And yep. So that's the potential target of this. Once again, don't get too caught up in the price, but get all the way caught up in what the project and the tech is doing. Okay. So that's one thing. Now let's go look at this Bitcoin and let's go back and let's look. Okay. Look at this. So Bitcoin back in 2000, here we go. Look at this. This is the 2017, 18, and then we had this crazy dip. Okay, we dropped 83%, like I said. All right. So we dropped 83%. Now watch this. I'm about to show you something people didn't see. All right. From here, look at this. All right. Dropped here, but we had a what? 100% gain. Okay. Watch this. 53%. Remember, we're in the bear market now. Everybody gets slaughtered, but I'm just showing you where there is opportunities. People still were making money on how to buy it, and they understood market structure. Because what is this? This is a higher as a low, higher low, lower low. Lower low, higher low, lower low. They're following it. You can still make money, and of course, people in the futures market can eat off of this too. But I'm just showing you that while the gloom and doom was happening, there were opportunities that were being made. Now watch this one. What if I told you in a bear market, Bitcoin grew 338%? You're like, huh? When did that happen? Exactly. You would never know that it happened because you're looking at the narratives of, oh, it's over. It's going to zero. It's going to zero. Bitcoin don't ever just go. It's a whole lot of movement. This thing went 338%. Then this is what happened. You got a what? Bull trap. Remember, fear of missing out. Look at all the people who got in right here and it just got ate up. But you did the other opposite, fear of missing out. Oh, these are levels I cannot ignore. Let me get in. Now watch this. People who got in up here did this. They lost 71%. So if they put $1,000 up here, what happened? They lost $710 unrealized. So if you knew, unrealized loss means that it's lost on paper, but it's not realized because you didn't sell it at a loss. So it's okay. because you see where it went. But look where we at now. We know Bitcoin is almost at 60 something $1,000. Right? So okay, it's good. Now watch this. Times two method. Even if you did get in up here at 13,836, where I measured it from, what do? You do 18,000. No, I'm sorry. 13,836 times two. So you're gonna buy Bitcoin as much as possible until it reaches 27,672. Right now, Bitcoin is at $59,292.23. You're in profit regardless. So the fear of missing out, folks, they dump everything in right here. What you do is say, nah, I'm times twoing it. So anything below, in fact, you tell yourself, I want it to go lower than where I found it at. And even if it goes higher than I found it at, it's still a buy zone. Why? It's because it's below 27,000. So the other person who do get in right here, but they're a dark horse member, they're different. They're a dark horse investor. So if they got in right here, they're buying everything all the way to here. Say about 27. We'll just put it somewhere in here. Okay. So all from here all the way down to whenever. Okay. This line does not mean that you stop buying to, you know what I'm saying, to where it crosses this. No, you stop buying until it crosses here. This is just your entry point. You stop buying when it gets here. So anything below, you keep going. So you see how this works. Now, let's see what the gains would be if you was bought down here. All right. To up here, you would be up 420%. Let's go ahead and take it all the way to its all-time high. All right, you be up 1,703%. And right now, if you didn't sell anything out, you're just holding on, you're still up 1,445%. And you still came in the market when it was at a height, but you were a dark horse investor. So you managed it better than somebody who comes in to throw a whole bunch in and then it pulls back. And then they're fearful, like, I ain't touching it. They don't add. You want to know something? Why do double tops occur in the market? Like some of these. Now, it's not the perfect double top, but you can see it a little bit. Let's see if I can find another one on the chart. Some of them, they can be a little bit off, but you can see the pattern. Look at this right here. It's not fully double top. If I went on a lower time frame, see, I can't. So, but you see this right here? It looks similar to a double top. Yeah, we can call this one. You got 2 points. All right, you got a rejection right here, and then you got another rejection right here. So what happened is price had a hard time breaking this level, and then came up to retest it, and then got pushed down. What does this suggest to? What it suggests is, okay, when price came up here the first time, a lot of people thought it was going to go higher, and it didn't, and it pulled back. Okay, so when price comes back, those traders, they remembered something. I said, man, last time it was at that price, it pulled back. I ain't taking that chance no more. I'm going to sell. Next time they come in here, I'm going to sell. This is why you get double tops, guys. Everybody in the market remember what pain it caused the last time that price was there. I'm out. And look what happened. And then they say, I was right. Yes, I'm out. But sometimes the market burns them. That's not a reason why you should get out. Because here we go right here. Boom. What? Man. If it get back to right here, I'm out. Boom. I'm out. See, I was right. Then boom. Oh, shit. and never they out. Then they got to get back in. They're like, oh, it gotta come back. It gotta come back. No, it don't. It kept going. Look where we at. It never came back to this area. Look at this. It ain't come back because you was jumping in and out. You didn't understand. That's why we do everything. It's like it's a plan. It's a plan. Stick with the plan. Work the plan. Now they mad. That's why we don't go off of how we felt when something is at a price point. Stick with it. Look at all these feelings. Now look where we at over here. Feelings, bam. Feelings, it could be bam or it could be bam. Who cares? The fundamentals have not dropped. Now, what do I remember I told you about the iconic Bart Simpson? So we have a regular Bart Simpson right here. And I'm going to show you. All right, Bart Simpson pattern. And this was created in crypto. Crypto came up with this. So you see the iconic hairline, and then you have the drop. Okay, let's go look at Bitcoin. You got the what? Iconic. When we saw this happening, we immediately was like, oh, yo, it's a Bart Simpson pattern. It's a bearish pattern. Like, we're going short. You can either take some trades in the future market and short it, or you can just hang tight and be ready for alts. So, like, we was ready to load up on the alts, and that's what we did. Okay, we just loading up on the alts on all this drop. Now watch this. What do you notice? The iconic, but you got to turn it upside down. So this is an inverted Bart Simpson pattern. So with an inverted Bart Simpson pattern, what does that mean? It means that this is upside down. Inverted means it's going to be a bullish. So the regular Bart Simpson pattern is bearish. The inverted is bullish. So what do you notice? Boom, 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 boom. Price did what? It rose. Now watch this. From this lows down here, look how much it grew. It grew 140%. And this is like Bitcoin. So when I was on Origin, remember I was telling you guys that it was forming a bigger Bart Simpson type pattern. Okay. And what we're going to see, and we're going to see a nice little scoop. Now, if we're going to higher time frame, there's a possibility we do see a potential cup and handle formation. I don't see one on the higher. Oh, well, right here you see one. You see a little cup, like a cup. And you can do the handle from this side, or you can do it from this side. It's a cup and handle, and it's bullishness. I believe that it's going to go up. Okay. So, all right, look at this right here. This could be a double top area. Let me take some of this stuff off the screen for y'all. I'm just going to take all this out. I'll just redo it later. Look at this. Price came back to this area, and what did it do? See? Rejection. Somebody remembered something. Also, what you want to understand, too, is this. Yes, double tops can be created because someone remembers a pain point. But also, double tops and double bottoms are areas where institutions go back and collect orders that was unfulfilled. So, for instance, if an institution was selling and all of a sudden the order did not get filled, they would literally push the market back up just to sell. And what happened? You get a big rejection. Anytime you see a huge wick or any wicks, institutions. Retail investors cannot move markets at all. That means somebody big came in the game and hit that sell button to get off a position that had slippage, meaning that there was not enough participants for them to sell to. So anytime you look on a chart on different price levels, okay, go back to BTC, different price levels, all right, what it means is that all these levels means that institutions are for, either buying or selling unfulfilled orders. Okay, they're going back and they're getting orders that was not filled. So when you see price skyrockets and then price comes back down to what we call key support levels, it's not coming back there just to say, hey, no, it's coming back to pick up its buddies. It's, oh no, there's some orders that did not get filled out here. So now we got our bags. Now we can go. We follow the money. Oh, y'all want to come back down here? We coming with you. Oh, y'all want to go over here? We're coming with you. But we do it in a discreet manner, behind the scenes. We're like snipers. We look and see what the market is doing. We see what the big boys are doing, and then that's what we do. When people in the group complain about, man, Voyager token taking forever, I wish it'd move. No, I don't. I don't wish it. No, stay here. Stay there in these levels for another 2 years. You about 2 years, bro? Yeah. Because if you go back in time 2 years, I mean, guys, going to 2022. We was in a pandemic in 2020 of March. We're about to go at 2022 of March. That's 2 years. 2 years went by mighty, mighty fast. You mean to tell me if I told you, bro, just load this whole entire time. In 2 years, you be thinking, well, man, why anybody got time for those 2 years? Well, time got time. And time don't care about what time you got. That 2 years gonna come. And here we are, going in 2 years. And look how much you probably missed out on because you worried about time, and time don't worry about you. Time does not care about you. So stop caring about time like that. No, don't give it that much power to the point where you're like, I ain't got time. But like, nah. That's why I said the times two is a sense of urgency, because time don't have to say, well, you know what? Since you're here, we're gonna consolidate for about 2 years to give you time to get your bags together. I don't know if time is gonna give us that. I don't know if Mother Earth, Death, whoever, giving us that. I mean, any of us can be gone tomorrow. Okay? So use the time to method in anything you do. Anything in life, business, whatever, let's multiply that thing, get it done, make a sense of urgency. You dating someone, y'all been you meet them, go ahead, shoot, times to that thing. You got 2 months to show me something. If you can't do it in 2 months, man, I don't know. Maybe relationship thing is a bad thing, because I ain't got time to be trying to invest in someone who keep going down. But it's a whole nother argument if the fundamentals hadn't changed. Still investing, I guess you can say that. All right, so I might put this on YouTube or I might keep it private. So I don't know yet. But I think people need to see this stuff, but they need to see why. If you are watching this, you're going to get more if you're part of Dark Horse Investor. All right. If you're part of Dark Horse Coins membership, you're gonna see the blessings of what we're gonna bring to the table. We're gonna be doing a lot more of this. Now, if I do put this out, I may extend just to be generous, because I want more people to get in, guys. I really do. I feel like we're right at the cusp, but I want people to get in and understanding that we're not here to be playing no games of looking for some lottery and trying to get rich real quick and then get out this market. No, we're committing to this. This is a lifelong journey. You're here for life. If you're not committed to being here for life, it's not going to work. Be prepared to fail. But your failure is going to be very, very limited, because you got people in the group that know what they're doing. We're going to help you. Okay? But we prepare you in that manner that you understand that's part of the game. See, a lot of people don't talk about that. Failing is part of the game. Anything you want to be great, you got to fail. Who becomes great at something that hadn't failed? That don't make sense. It's fail. I failed at doing certain things with dark horse coins. It felt like some of y'all didn't get prepared correctly with. That's why you see me doing more interactive, like doing videos and really addressing things, stuff like that. I mean, I'm not gonna, and it's not the failure what you think. It's just part of the process, guys. You gotta grow, you gotta learn. It takes a lot. Stop being hard on yourself. You're trying. Yeah, I don't call it generational curses anymore. I call it generational choices. You got a generation. We got to break generational choices, and some of those choices are to remain ignorant to the things that have destroyed us. It doesn't even matter what your nationality, skin color, with all that stuff. Some of you come from backgrounds and family that is very, very challenging, and they're making constant, unconscious choices that are derailing the family unit. And you are here to break generational choices. And if you want to say curses, it ain't gonna be easy. And I realized that I can't make it that easy to where I don't challenge you. I may say some things to push you to the point where you're like, man, that's uncalled for. Well, no, it's called for if you want some choices to be changed. Because this ain't it. All right. So if I do decide to leave this thing open just a little bit to get some stragglers for if God put it in your soul or your spirit to drop by today to Dark Horse on that membership site, a little discounted, here you go. But remember that time we're gonna see. We're gonna see. Some of you been dragging your feet. Oh, I'm gonna get with you. Well, we're gonna see. Cause that thing Friday was supposed to be done. But every now and then get distracted. And that's just the goodness of my heart. I'm gonna let God take this one over. But all right, come play around. It'll be like 2 or 3 o'clock, and boom, then it's done. Stop playing. Now, for you who are here, congratulations. We're gonna be good. We're gonna take care of each other. I'm confident. I ain't confident because it's market in the bull run. I'm confident because you're gonna learn a skill. Yes, you're gonna learn a skill. You're gonna learn how to do other business stuff too. You're gonna learn how to build your family unit. You're gonna learn how to not be afraid. Damn them taxes. Everybody afraid of the taxes. Man, pay the tax. Half the people pay their taxes wrong anyway. They don't even understand. They're going off of misinformation. It's a whole lot of stuff. Come on now. Get out of that poor mentality about taxes. I mean, what's the tax bill? Nobody care about what tax bill is. Come on, man. Make more money. That's what. Just make more. It should be a privilege. Yes, I hate taxes, but it also motivator too. Hell, I need to make more to cover what they took. Simple as that. We America ain't the best in a lot of areas, but most of us wouldn't want to leave here to go to another place that don't have some of the things we have. We can always make the world better. If you really want to truly build wealth, you can't be selfish. It can't always be about you, right? So that's one of the reasons why we open up. It's one of the reasons why we don't beat people over the head with crazy outrageous. See, some people do courses $3,000, $5,000, whatever. To each his own. I mean, I'm not trying to make the rich richer, and I'm not saying that you got to be rich to have 3,000, 5,000. But let's be honest, there's not a lot of people around here that got $3,000, $5,000 just sitting around discretionary income. Okay, that's whoever charges it. That's their target audience. It is what it is. My target audience is really the millennials or um, it's the millennials, but I don't care if you're older or whatever. You get it. That happens. It comes to the territory. But it's people who really want to build generational wealth, but they also can connect to an idea. They can connect to the underdog. With Dark Horse, we're not supposed to win. You counted us out. We showed up. We showed out. And they're like, dang, who are they? Who's that? How do they do? Yes, we got the juice. We just ain't told everybody we got the juice. We want you to think that, oh, they don't know what they're doing. They don't know. We know. You're the underdog. You listeners, you're underdog. They count you out. We ain't bougie over here. We get dirty. We family. We watch out for each other. That's what we do. We setting the standard. We calling out. We don't argue. We don't do none of that. We keep it real. Sometimes we gotta protect that by not just opening up a membership when right now we good. That don't mean it's always gonna be like that. But we good as far as we respect each other, everybody grinding, we doing what we do. We can make changes in life, guys. We don't have to be one of those groups where people tearing each other down, people arguing, people dismissing what they say. Nah. Family, you have that, but at the same time, too, it's the type of family that if you do have some of that, everybody's still respect in a manner that, nah, that's my bro, that's my sis. Like, hey, I know how their personality is. They don't really get to me, but I know they got my back type deal. And that's how I feel with Dark Horse Coins and the members. I feel they got my back, and I know I got their back. Are there some members in the group that we may not know of that may not really truly fit the personality of what we look for? Yeah. Do they talk? No. I don't know who they are. So that's a great thing that they're at bay. And that may be a testament to the group. Or that people are so positive that the negative feel like, boy, I don't even need to say nothing because they're going to eat me up if I even say something. That's what we want. Man, we breaking all kind of generational choices right here. Nobody, no, we're not doing this. Life already hard. And don't stop making life hard. Humans making humans' lives worse. No, I'd rather Mother Nature. COVID, that was enough. That was challenging. They ain't got nothing to do with us. That what we should be banding together to try to beat that. Not us making people's lives harder. No. Hit the subscribe button. Share. Once again, if you're not a member, this is what I call the emotional catering in me is trying to be so nice to get y'all to see it. You got somebody who I don't do this for the money. I really care less about it like that. But we had to put something on the table because the last time we did something for free, people just trampled all over it. And then that's why a lot of people do charge the $3,000 to $5,000 because they want to bring in people who are serious. It's because the valuation. The more something appears to be of more value, they feel like they can weave out some people who are not going to take it serious. And that is a true statement. But I want the universe, whatever your belief is, to weave them out. And at the end of the day, we're going to show that, we gave y'all the game. You didn't take advantage. That's a testament to you. If you didn't take advantage and you self-sabotage, you can never say it was because of the price. Y'all have a great one.